Okay, good afternoon, everybody, and welcome to Paul's Monday Market Update, number 158 for the 14th of October, 2024. I hope you're all well. I hope you've had a good weekend and you're ready for an interesting week ahead. For those of you just joining us for the first time, the Monday Market Update is just literally an insight into what I'm looking at for the markets for the week ahead. It is not a trade signal service. It is not a recommendation service. It's just basically what I'm looking at and might be of relevance or interest to yourself. Just as a little bit of an aside at the moment. So I am, even though I'm doing my analysis, I'm operating under what I would call a psychological stop loss at the moment, mainly because my father's been in hospital for the last 2 weeks. So basically, whilst I do my analysis, okay, because it gives me a bit of time and a bit of focus and distraction, I don't trade at the moment. And this is the kind of stuff I talk about on the VTP course that when major events like that are going on in your life, yeah, actually, you just you don't actually have to trade, and in fact, it's probably for the best that you don't. But nonetheless, okay, we do our analysis. We can keep going because actually, it's it's good to keep your process and routines going in such times. So anyway, I'm hoping that you can all hear my voice. I'm hoping that you can see the slides. So those of you who are in the room, if one of you could let us know, it'd be much appreciated, and then we will crack on with the session as it goes. That's great. Thank you. No, thank you, Simon. Thank you, Peter. Thank you, everybody. That's really good. As always, just remember that you are responsible for your own trading decisions. If you want to sort of just have a little bit more trading education, well, every Monday afternoon at 2 o'clock London time, I do a webinar for active trades. You can either join it on the Active Trades website or use the QR code there. Today, we'll be talking about should we be trading pullbacks or breakouts. So if you want to join us for that, you are indeed, of course, very, very welcome. Okay, let's dig into our own work. Let's have a look at what's going on in the markets. So if you're new to trading or new to joining us, I appreciate this might look maybe a little bit overwhelming or sort of intimidating, but once you start to get used to it, it doesn't take that much to keep on top of it. It's really it's the STAM. Okay, it's the work that I do every weekend. Okay, take me between about 45 minutes to 90 minutes, depending upon how busy the markets are, and really what I'm looking to identify is where is the strength and where is the weakness within the FX markets. Even though I have plugins and such that can do it for me, I still prefer to do it by hand because I find when I do it by hand, it's part of my best trading process. It's part of my best routine. It keeps me connected to the market and it starts to get my kind of head in the game for the week ahead. So where are we and what is it telling us? Well, here we are. We are into week 42 of the year, okay, for the 14th of October. Where's the strength and where's the weakness? What we have seen, okay, is Swiss franc has basically bullied its way up to the top of the pile. Sterling remains in second place, okay, and as you've heard me say before, a lot of that is due to the weakness of others more so than the inherent strength of the sterling, and especially when I start to look at the individual sterling currencies, okay, that is a mixed bag in terms of sells and buying environment. Okay, so that's just reinforcing that. We also do have some quite a bit of UK news coming out this week. So of course, tomorrow we've got jobs numbers. Then Wednesday we'll have CPI numbers, and then Friday we've got the retail sales numbers. So there's a bit of UK data coming out. Will that crack the dam, so to speak? In terms of UK strength, sterling strength, and we shall wait and see. My view, it remains the same, namely that sterling will sort of mince about a bit until we get the budget on the 30th of October, and then we'll basically everyone will start to make decisions about what they want to do in terms of investing or not in the UK, and that'll have an impact, of course, on sterling flows. So there we go. Sterling's holding up there at the bottom of the pile. Okay, Canadian dollar has kind of dropped its way back, and that has kind of followed through in terms of we've seen, I think it's like about 2% drop in oil this morning. A lot of that to do with the sort of the data coming out of China, or rather the lack of it on a particular occasion. People getting a bit worried about the Chinese economy. There's it's I don't really invest in any Chinese stocks because I'm just don't really have the kind of trust or belief. But of course, everyone at the moment is trying to effectively pile into the Chinese stock market. And we looked at it a few weeks ago, okay, and of course it's had a bit of a bump and a run, but invariably that kind of data this morning has kind of taken the bit of the wind out of the sails, and that undoubtedly has a little bit of a reflection on things like some of the other condols like Kiwi dollar, right? Okay, they cut interest rates 0.5%, wasn't it, last week? Interestingly, Aussie remains strong enough. Okay, it didn't take long, it didn't last long on top of the pile, but that's not a massive surprise. But what we have seen is yen continues to sort of messes around a bit. Okay, 1 week it's top of the pile, next week it's bottom of the pile. Now it's off the bottom of the pile. Okay, but people are still left scratching their head a little bit about. What we have seen is, of course, that US dollar strength, okay, is creeping back in from being bottom of the pile there for a good couple of months. We see that strengthening up, and we'll look at that the US dollar in a moment, of course, and that's what we're always interested in. What the dollar's doing, and euro. Euro schmuro. It's kind of doing its thing. All right. Certainly when we look at kind of since the markets have opened last night, all right, for us here in terms of dollar has strengthened there on it. There was a couple of intraday trades, okay, a couple of setups, etc. on euro and a few of the others, but you can see that kind of a bit of dollar strength there against the others. All right, that's what we've seen this morning. When we start to look at some of the indices and commodities, you can see that basically Bosch, they are still in strategic buys, and certainly in terms of Dow and S&P, they pushed in close to all-time highs again last week. Right, that's of relevance and interest. FTSE is not unsurprisingly doing its own thing. As I said, it's a tactical short there, and as I said earlier, I really don't think anything major is going to happen in the UK until after that budget. Right, I think there's been lots of talk about them bumping CGT from what I think I saw from 20% to 39%. I think that's what they kind of talking about, which will just basically it'll break the entrepreneurial spirit in the UK and will just invariably increase an exodus of value and entrepreneurial types creating value and wealth, etc. I suspect they will. I suspect what will happen is they're just playing political games, and that actually what will happen is that they'll release sort of news to the media that they're thinking of bumping it up from 20% to 39%, and then actually they'll only bump it up to 33% or something like that, and claim that is a great victory for them, that they listened to people's concerns and didn't go as hard. The fact that it's gone from 20% to 33% will be glossed over, magically, etc. But nevertheless, the damage will have been done. So anyway, yeah, FTSE's tactical short, and as I said, I don't think anybody's really going to make any big major decisions until they get the full spiel on the budget. But oil, okay, even though the drop is still been a little bit of a tactical buy, we'll see how that continues. A lot of that, I think, you've got China on one side, and then you've got the Middle East on the other, and it's like kind of toing and froing there. Gold and silver remain in strategic buys, as does Bitcoin. The interesting thing is, even though they're kind of moving to all-time highs, those American indices, the VIX by my model is still kind of in a bearish mode, which doesn't happen very often. It's kind of curious to me if nobody else. All right, so that's what we're looking at there. Okay, in terms of primarily the sort of the FX and the indexes and some commodities in terms of strength and weakness. Let's just have a look at a couple of charts of interest in terms of what's coming down the pipe this week. All right, I don't claim to be an equity specialist. This is more about just having an opportunity to, as I say, look at interests or charts that might be of interest. You might want to watch to see how they played out. Last week we talked an awful lot about starting to get back into earnings season. We looked at quite a few of the financial companies, okay, and they had a good numbers. It was a good end to the week in terms of XLF and financials, and then of course that's carrying through into others. So if you remember last week, we looked at JP Morgan. I think they bumped about 4% on the numbers. BlackRock, they bumped about 4% as well. Wells Fargo did 6%, and XLF in particular has it, and had a good jump as well. And you can see it here. Okay, this week we've got Bank of America, Goldman Sachs. We've got quite a few. It's really started to kick off in earnest. And if we look at Bank of America, I'm kind of curious and interested in this because, as you can see, and we're going to come back to this an awful lot, from that sort of November 22 double top, overall, the trend had been down until this kind of October 23 turnaround here, big morning star, huge big turnaround. And then, you can see Bosch That's what we've gone from. Yes, we had a little bit of a roll off the top there. People were starting to get a bit worried about Bank of America. I don't claim to be an equity specialist, but anything that is involved that Warren Buffett is either sniffing around or selling shares in is going to sort of get people interested. You can see that last week it had a bump there, okay, and it's looking like in the pre-market it's having another little bump up, etc. But I suspect that is probably more to do with the, as I said, the kind of overall sector giddiness based upon the numbers that we saw on Friday. So I'll be interested to see, if those numbers are not as good as people expecting, it would not surprise me if we sort of kind of were deflated back down to $40 and such. So you might just want to watch that tomorrow. I think it's tomorrow, yeah, to see how that particularly plays out in itself. Quarter says good bounce back from the yen carry trade drama. Yep, no, you're absolutely right. There has been a good, there's been a good bounce back from that. And across multiple asset classes, across multiple instruments. During a period August, which is normally it's deathly quiet and stuff. So, but there's been quite good moves back on that. So, so there you go. Bank of America. Who else are putting it? Goldman. All right, Goldman Sachs. Okay. Not massively dissimilar in the sense that this October 23. Okay, we talked about it. Time we had a it was a real bear squeeze. Okay. We really pushed lower and then basically had a huge big buyout. Okay. Big thing back up above the 200. And, since then we have been in a great trend there. Okay. But interestingly, we saw here, there was a bearish weekly key reversal there. Okay. Price pushed to new highs, but rolled over and closed, at new lows. And this is as we went into some of that drama in kind of, July, sort of August time. But interestingly, the 20 is still holding, all right, as as dynamic support. We've kind of coiled up a little bit there, and as you can see, okay, we've been sort of kind of pivoting around $500. Last week got hauled its way up higher. The pre-market is higher as well, and once again, I'll be interested to see do Goldman's numbers now give it the oomph to kind of continue in this what has been really a year's bullish uptrend. Yes, a bit messy here at the end of it here, okay, rather than the last couple of months, but that's no shock there. Okay, no trend is perfect, but as I said, you might want to just watch to see if the numbers are enough to basically give Goldman Sachs the kind of the bump away from $500. Finally, Netflix. All right, I think they're out later this week. I think it might be Thursday. But listen, it is on the list for this week. It's an interesting chart. Netflix. For those of you joined us when we first started doing these Monday market updates. Of course, that was in the time of COVID, and of course, Netflix, flew up. All right, okay, exploded in price because everyone was locked down at home watching, dubious dramas on Netflix. Then, of course, once the vaccines were released, okay, and communities and markets opened up, Netflix absolutely crashed, okay. And then once again, you can see here, having been up to sort of $700 here. All right, it was about kind of November 22, okay, and we finished off. And we had a real sort of tech collapse, which has happened there. Okay, and part of that, some of you might remember, Netflix just got a bit fed up of everybody sharing their passwords and said, that would no longer happen, and everyone would have to, to buy their own accounts or buy their own subscriptions. And a lot of people thought that won't happen, but it seems to have happened. And after this kind of dubious double bottom, you can see for yourself that actually, we have been in a pretty consistent uptrend there, haven't we? Pretty consistent uptrend there for a good while, for a good 18 months, 2 years. And I'm interested because we're back up at the previous highs of 700. You can see we've been closing above it. And now we're looking to see, right, okay, is that data going to effectively help us secure 700 as a base before I move higher, or if those numbers are weak, reflecting of let's say the consumer economy in the US, will we get a drop at least down to, but I'd say to the 20 and stuff. So it's earnings coming out where it's at a big round number, at an inflection point. So that's why it becomes of interest to me. I like to see how markets react at those particular significant levels. So you might want to add that to your watch list and just watch and see how that plays out later on this week. Okay, so there's a few charts of interest. Let's switch across to the live markets now and have a little look at what's been going on there. So just bear with me for a moment, and we'll switch across to the live charts. Okay, so Once again, I hope you can still hear me. I hope you can see the charts now. Okay, this is just my indices profile. Okay, so I've got Dow, Nasdaq, S&P 500, Russell, FTSE, Nikkei, DAX, and oil. Okay, so why don't we just quickly do oil there in that, having had that bump here, we've kind of dropped our way there, and a lot of people are there. That is, they are concerned. So there's lots of concerns, isn't there? But the kind of the one that's on people's minds today is whether the Chinese economy is just weak, which means there's less demand, which means that has knock-on impacts to particular assets and particular instruments. Okay, and that's what people are worried about there. And then, of course, should the issues, or the conflicts in Lebanon and Palestine and Israel and Iran take a bit of a turn this week, well, then of course that will probably pump oil up as well. So oil is volatile because the geopolitical world at the moment is a little bit volatile itself. But anyway, what I'm interested in here in terms of the charts is look at the kind of price action that we're printing. We're printing in that case, really strong bullish weekly candles on the Dow. It is still what I would call a momentum pin bar. Okay, as in it is a bullish pin bar. It is supporting the ongoing trend on the Nasdaq. S&P 500, did the same as well, very bullish, and even Russell. Okay, that is it's a bullish pin bar, and I would suggest that is still supporting a kind of a bullish theme. And if you want to look at it, well, DAX did the same. DAX did the same as well. Nikkei did a version of it, and FTSE was dull. But there you go. Tell me something new. All right. But what we're looking at is, as I said, is this data that's looking at that now. That is telling you that that data on Friday, okay, those kind of earnings, is keeping people happy and is keeping excited. I think that the stronger the stock market looks, the better it is for the incumbent party. That would be my view. Others may differ. In terms of in the run up to the US election, which is it's only 2-3 weeks away now. Okay. The interesting thing is that the sort of, let's say, the divergence between Wall Street and Main Street. Okay, the stock markets look healthy. I suspect if you were to ask the average Joe in the street in America, he'd probably differ with you in terms of his experience of the economy at the moment. And I think that's a fascinating question or conundrum we have going into the election in 2 or 3 weeks. Is that which is going to win out? Is it going to be the Wall Street message, or is it going to be the Main Street message? That's the way I'd be looking at it. But us as traders, that is still bullish. Okay, that is still bullish. So why would you fight it? Okay, why would you fight it? There's nothing there giving you any indication of bearish reversals or anything. That is bullish. All right, it might be kind of exhaustion at the end of it, but it is not. There is no reversal there. So why would you look to fight it? Okay, I'm a great believer in that. Don't fight the trend. All right, when you've got no reason to, all right, and there is really at the moment no reason to fight that trend at the moment. As I said, let's look a little bit closer to home. FTSE, okay, the weekly chart. So you can see that we've had the Dow and S&P pushing to all-time highs, but actually what we're seeing here, look at that. The FTSE really it's been dull, right? There was a bit of a pre-election coil, a post-election bit of giddiness, and then the new government opened its mouth, and then basically, that's what's happened. Is basically, we are coiling up now again, and as I said, I think we're coiling up into the 30th of October budget. And people are just wondering how badly they're going to get screwed, and that, of course, will change sentiment towards the UK, and of course that'll have an impact on FTSE and sterling. I just look at it there. Maybe they will surprise us all. They keep talking about being, a government of value creation and stuff and job creation. I suspect the truth will be somewhat different, but maybe that's just me being a cynical old sod. That does tend to be my modus operandi these days and stuff and what have you. But ultimately, as a trader, you have to trade what you see, and at the moment, that is just going nowhere. Has done for the last couple of weeks. Maybe the UK data this week will give us an indication. Perhaps we've got 3 bits of it coming out this week. Maybe that will give us an indication of trajectory. I shall wait and see. But as I said, 30th of October, nothing's happening really of major before that. And then after that, we'll see if carnage will ensue. Looking at a couple of the a couple of the other commodities. So let's have a little look at gold. You know, gold continues to push higher. Okay, last week is once again it is a in the same way as the US indices, it is a supportive, or it is a momentum pullback, as in it is supporting the existing momentum and trend. Okay, if I go down to the daily chart, we can see that having it started the week and pulled its way back once again. It bounces off the 20 with a nice bullish key reversal, engulfing candle, may push our way up. And we will see, interestingly, what's going on there, because we are having, I think we're having a fantastic kind of tussle between the American indices, the US Treasuries, gold, and the dollar, as to which is the kind of the winning theme, which really is the true theme at the moment. Okay, and there is still going on, but once again, for new traders, that is a bullish weekly uptrend. Why would you fight it? Okay, if you're a longer term trader, why would you fight that? All right, you don't fight these trends. You're trying to find a way. How can you get a piece of them? That's what you're particularly looking at. Then, if we look at silver, silver has not performed in any way as beautifully as gold. You can see there, really, for the last 6 months, it has been, whilst there has been opportunities, there's also been lots of head fakes to both sides. There's been bull squeezes, bear squeezes. Okay, what I've been interested in is, after this really strong bounce from $28, we went all the way back up to these highs, but once again, on the weekly, couldn't get above the highs, couldn't close, and have come and fallen away from there. And you look at the daily chart, there's a kind of, an overextended double top there, which kind of dropped its way back. Where did it drop its way back? Back in towards the 30 region. That shouldn't really be a shock, but I'm interested now to see, does it have what it takes to push back up to these, yearly highs? All right, that's what I'd be looking at there. Okay, that's what I'd be interested in. If you look at last week's 4-hour chart, it dropped its way nicely. It bounced off the 200 period moving average and came its way up there. I think we're coiling up there, and I wonder if we're coiling up, waiting for some data that is going to be the catalyst to shift it. All right, that's the way I'd be looking at that at the moment. All right, let's have a look at the dollar. Then maybe we'll have a look at Swiss franc, and we always finish on sterling. Okay, so let's see what the kind of the dollar is telling us. How is it playing its way out and stuff. So I always start with the dollar index. All right, and here's the weekly chart, the dollar index. We talked about how this was the monthly 50, the big round number at 100, the 200 period support. Basically, lots of support there. Okay, and as you can see, we bounced off it after the NFP, wasn't it? I've lost all track of days and time for the last couple of weeks. I'm afraid, with spending time in and out of hospitals, you just you lose it. You lose real track of your days, etc. But you can see for yourself, bang, that was just a really strong bounce off there. Now, interestingly, we had this week here. Last week we closed bullish, but I wouldn't exactly say, if you're looking at the daily price action, yes, it's bullish. Yes, we remain in a trend. No, we haven't broken any market structure, but I wouldn't exactly say, it was, super bullish. And, it might well be that because it had been so bullish this week, everybody's caught on the offside. And this is a week when everybody's scratching their head and reflecting and looking, all right, well, actually, which way are we going? But you can see for yourself, daily chart, we're above the 50, that is a daily uptrend. Okay. And so if you're looking at that as a daily uptrend, where else are we going? And what interests me is, this is dollar against Swiss franc. It looks pretty similar to the dollar index. Okay. And interesting, remember, if we looked at the STAM, the Swiss franc has kind of, maneuvered its way back to the top of the pile. But even with that, it is still weakening, against the US dollar. And that's the kind of the underlying story we want to have a look at. Even when the Swiss franc is strong, the dollar is still basically punching it higher. Okay, and the price action you can see there. Yes, we've had that's a bearish engulfing candle there, but you can see already today, we're kind of a bit of dollar strength coming through there. Right, that's just working its way there. So, that kind of interests me, because that's telling me other tales, and it's feeding in, as I said, to that kind of story about what is the real theme. What's really going on. If we look at the opposites of the dollar index, well, we've got euro dollar. And, having had that strong week, it's a bearish week, but a little bit like the dollar index. The price action there was just a bit of a continuation, all right, bit of a continuation, but not. But that was after that really super strong week. But that is still euro weakness, dollar strength there. That's what people are looking at. No surprise, okay. Dollar against Canadian, because you've got effectively dollar strengthening, Canadian dollar weakening. Look at that. All right, that's telling you very clearly who's where's the strength and where's the weakness with regard to that. But even Aussie dollar, okay, which was third on the STAM, you can see that last week drifted its way down. It's continuing its way. Look at that. Okay, we're now been to sub the 50. So, when the dollar starts to get strong and starts to pick up, you want to take note of it. Is this the start of a long-term trend of the dollar? I honestly have no idea because, of course, everything could change post the US election. All right, maybe this is people positioning before election. Maybe this is just people just being a little bit opportunist and taking some trades in front of it, just get a little bit of the action. I'm honest to say I don't know. But you trade what you see. All right, that's what you see, and you can see for yourself here. A Kiwi dollar has been shown in that, euro dollar, okay, Aussie dollar, dollar yen, okay, dollar Swiss franc, it's showing dollar strength coming back in, okay, and we'll see whether that is just a temporary blip or whether that's giving us something more. All right, so this is Swiss franc. So I said Swiss franc has kind of gone to the top of the pile, but as we just said, all right, here dollar Swiss franc here, okay, it's been in a block, and actually, dollar is strengthening against it there. Interestingly, even with the Swiss franc, against the Canadian dollar, it's really kind of been in a block there. You've got Swiss franc top, Swiss Canadian dollar weakening. All right, yeah, we had a weak thing, but it's still working its way there. Okay, if you look at euro against Swiss franc, okay, it's kind of in a sort of just coiling up there. I haven't drawn that pretty well, but hopefully you can get the gist of what I'm trying to get across. The euro against the Swiss franc is coiling up there. Pound against Swiss franc, you can look at it here. What I'm interested there is the 20-period moving average is acting as really nice dynamic resistance, but you also might say, well, do you want Paul? It's coiling up here. What's the world getting ready for? Perhaps the only version of it that was kind of tradable on the weekly chart was this really nice move from the Kiwi against the Swiss franc, okay, where we had a run back up into the averages and then a nice bearish pin bar off the 50, and that has followed its way through there, okay, on that Kiwi weakness, Swiss franc strength there. But as I'm saying, even though STAM's at the top of the pile, I wouldn't exactly say the Swiss franc is punching its weight there. Okay, there's just a case of just really a case of, I think, people positioning, and as I've said along for sterling strength. All right, sterling strength is more because of the weakness of others more so than incumbent strength in sterling, and you might say the same for the Swiss franc at the moment as well. All right, let's finish off with, we might have run by a minute, so let's finish off as always with sterling. All right, let's start with cable, weekly chart. The uptrend, I would suggest is kind of certainly over for the moment, and not unsurprisingly, prices drifting back to that 130 level. That shouldn't really be a massive shock there. You can see there, okay. Even though sterling is number 2 in the pile, it is still grafting its way down to 130. Okay, you can see last week was a pretty tough week. If you're trying to get some swings, or if you're trying to get a little bit of volatility after the week you've had there, that's a grinding week, that isn't it? That is just grinding its way down there. Okay, a tough week there. Okay, for you to trade, welcome to trading. That's the story. But for me, I would be saying 130 is the pivot, all right, and we are working our way down there, and that is an indication of sort of some of that dollar strength. As we said, pound Swiss, all right, pound Swiss is just it's kind of coiling up there. Pound yen is not above the weekly 20, all right, but you can see that is acting as dynamic resistance, all right, and we'll see what happens there. See if, because of course we have the Japanese election on the 27th. So what's that? Is that like that's a week on Sunday? So coming Sunday, that'll be that. Okay, people want to do that. When we look at the pound against Canadian dollar, has been interesting in that, we had the push and we had this huge, big bearish key reversal there. Okay. But then actually, bong, we've had Canadian dollar weaken again and stuff, and we are back up pivoting around 180. And that's what we'd be looking at. Pound against New Zealand dollar, having kind of broken out of there, we kind of pulled back a bit there. There's a bit of Kiwi weakness coming in there. It's bouncing around, but not great. We saw pound against Aussie on the weekly chart. You might say that is a little bit of a bull flag. I've just drawn it very, very poorly. I'd be wanting to see to break that kind of trend line better and close above it to give us an indication that there's real sterling strength against the Aussie, because at the moment I think they're just cancelling each other out. They're 2 and 3 on the STAM. If I look at euro sterling, we talked about it a couple of weeks ago. It's been a nice downtrend down towards the kind of 83.50, 83 area. Had this huge high wave candle. Last week it was a bullish close, but it's an inside bar pin bar. It pushed up to 84, okay, which we talked about at the start last week, and then it's dropped its way down there. Okay, it's just kind of interesting price action. There we go. Once again last week, this is the 4-hour chart. We pushed our way up to 84, and then we've just drifted our way down, and we're kind of we're trading around about 83.70. We're between 84 and 83.50. Once again, maybe some of the sterling data will come out. Remember, we also have the Euro ECB this week. Okay, people are expecting another 0.25% cut there, so that will have an impact on the euro as well. So Euro GBP is going to be finely balanced, I think, between how good or how poor UK data is, and the expected cut in the euro from ECB on Thursday. Okay, so we overran there a little bit, so I do apologise a little bit, but let's draw to a close there. As I said, the Monday market update is me just trying to cram in as much as I possibly can in the sort of 25, 30 minutes, trying to share as much. So you might want to add it to your watch list or take a lot, or you can just learn from it. As always, I wish you the best of success in your trading endeavours. Just for those of you on the VTP, there'll be no stage 1 call again tonight because I'm hospital visiting hours. But I hope you all have a great week, and I look forward to speaking to you soon. Okay, take care, everybody. Cheers.